Deep within Kasigao, a sweeping wilderness of craggy hills and savanna roamed by elephants in a woodland located in southern Kenya, a team armed with clipboards and measuring tapes is busy studying an unremarkable tree. Gnarled and leafless, it nonetheless has great value. It stores carbon.
They measure the diameter at breast height, they measure the height, they measure the size of the canopy, they look at whether the tree is living or dead. All these parameters, they go into what we call the carbon model. So the data is input into a carbon model, and that ultimately translates into the amount of carbon stocks that we have in the project area.
Kenyan President William Ruto, who is hosting a climate summit in Nairobi this week, believes Africa's carbon sinks are unparalleled and should be tapped into.
The restoration and expansion of Africa's natural carbon sinks are not just an environmental imperative, in fact. They are an unparalleled economic gold mine. They have the potential to absorb millions of tons of CO2 annually, which should translate into billions of dollars if we were living in a fair world.
Carbon markets are largely unregulated, and accusations that some offsets, particularly forest-based ones, do little for the environment or exploit communities have sent prices crashing this year.
What is really important is to take these ecosystems for what they really account for us and to pay the fair price for the carbon sequestration. So I think a claim from the continent, which is to see a better price for carbon, is a very fair one and something that the world should really support and answer to.
Kenya already generates the most offsets in Africa and despite market uncertainty, sees the potential for a much bigger domestic industry capable of creating much needed jobs and economic growth.